Any intelligent fool can make things bigger, more complex, and more violent. It takes a touch of genius and a lot of courage to move in the opposite direction. Albert Einstein, always good for a quote and a lot of wisdom there. It does take courage to move in the opposite direction, to make things as simple as possible, and to realize our only job in charting is to separate the signal from the noise. The noise is everything else going on around you. The signal is price movement. That is what we focus on. That is why we keep our chart simple. And friends, it is getting interesting. Look at what we have happening on the SPY. That's the S&P 500. You know we had a week that was back and forth, up and down. How did it end up? Ended up weekly vertical crossover in effect. We actually printed out the option charts and the prices for 3:55 p.m. That is on the Friday where the crossover occurred. The derivative oscillator is still positive, but we do have a confirmed weekly vertical crossover happening. So we saw the market at the end of the day start moving down for the day 0.69% overall. We'll see. I was just watching because I was doing some trading at the end of the market, or attempting to do some, looking at where things were and also keeping up with those options montages for you, something new that we are doing as we continue to work on the book, Optionable Wealth. Now, I want to caution all of you who are getting real excited about options. My friends, you can't do tricks on a bicycle till you can ride a bicycle. And the trick that you've got to first learn is to get on that bike, pedal, and stay up. That is charting. If you are not consistently making money, and I mean virtual dollars, in your practice trades, using your trade worksheet, finding buy and sell points, and making a reasonable percentage gain, you are wasting your time trying to learn options. You got to be able to read the charts first. You got to read the bike before you have to ride the bike before you can do the tricks. You got to read the charts before you can even think about options, okay? So focus on accurately reading the charts. Options are easy, man. There's nothing to them. They flow with the price, okay? So price is going down, put options. Price is going up, call options. It's real easy. Buy 5 months out in time. To protect yourself, and the better you get, the further out of the money you can go on your options. That's pretty much it. I mean, I can give you the option lesson real quick. And again, those are practice trades. I'm not giving you real money advice. It's not what we do here. An education channel wants you to practice. That's options in a nutshell right there. Boom, easy. The key, my friends, though, is to reading the charts. Once you do that, once you can do that, the world's your oyster. But that's why I continue to focus on the signal and not the noise. What really counts? Being able to determine price direction. So, weekly vertical crossover in effect. We see that on the weekly. We go to the 2-day, and of course we see a green spinning top, indecision tending up, price percent oscillator still heading down, derivative oscillator gaining downward momentum. We have broken the 2-day trend line. We are still down, hasn't crossed over, so we still have that 2-day vertical crossover in effect. We need to go ahead and get rid of our gold trend line. We don't have that right now until we get another week's worth of movement. We don't draw a weekly trend line. We go to the 4-hour chart. What do we see there? We have seen the way that things have been flattening. Well, we've seen the way that things flattened out and then moved up. And what we see happening over the course of the day with the down movement of 0.69% on our Heiken Ashi candlesticks is a sideways slide tending down. Derivative oscillator gaining upward momentum, price percent oscillator heading up. So again, if you did not jump into a trade in the afternoon on Friday and you had reasons not to do that, wait for this 4-hour chart to start cranking over, going down, if indeed it does that, On Monday, look at the charts around 10:30 or noon. If you're going to stick with the 4-hour chart, find yourself a jumping in place if the market rolls over. You want to follow that price percent oscillator as the trigger on your 4-hour chart. So again, we go from there back to the weekly, move to the Qs, Q, Q, Q. What do we see going on there? Another weekly vertical crossover in effect. Ding, 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 ding. Derivative oscillator still positive. Price percent oscillator did crossover going down. Red down candle. Go to the 2-day chart. Looks akin to what we saw with the S&P 500, except a little less up movement, almost a doji there on the 2-day candle. Price percent oscillator heading down. Derivative oscillator heading down. Blown through, however, in that up movement, the 2-day trend line. Go to the 4-hour chart to see what's happening there. And similar, day and a half of up movement and then a sideways slide, ending the week with a red doji. Price percent oscillator heading up. Derivative oscillator heading up. Same thing. You didn't look for a jumping in point on Friday afternoon and you had reasons not to. Look for a crossover as the week begins on the 4-hour chart going down. Again, not to confuse anybody. I am just experimenting, looking at jumping in during the professional hour in the afternoon on Friday, seeing how that works. You guys ask me all the time for idiot simple entry points, and I'm just doing a little experiment, finding out how it works. As I've looked back over the course of this year, it's worked every time. So that made bells go off in my head to say, let's just keep checking it out and see how it works. Also checking it out for options to see what the options plays would have done. So we'll see. Maybe it doesn't hold. Maybe it doesn't work. And we'll just keep doing what we've been doing. But once I did that review for you guys of the success that we've had over the course of this year with our entry points, it just convinced me to take a look at Friday afternoons. That's all we're doing here. Not trying to confuse anybody. Go to TLT 20-year bonds. What do we see going on there? Big green candle up week. Remember, had that weekly vertical crossover last Friday? We actually had an entry point that we recorded at 355 on that Friday for an up move on TLT. 136.29 is our jumping in point. High for the week, 143.06. So not bad from 36.29 up to a high of 143.06. We see the derivative oscillators gaining upward momentum. Price percent oscillator continuing to move up on that weekly chart. Go to the 2-day chart. We see some slowing down there, don't we, on this latest? It's not a red, solid red candle, but it is a warning candle. Things slowing down a little bit, down for the day. Just a little bit, 0.20%. Price percent oscillator still heading up. Derivative oscillator still heading up. What's going on that 4-hour chart? We saw that things moved over going down strongly in the afternoon on Thursday and then morning on Thursday, and then recovered a little bit in the afternoon, recovered in the morning on Friday, pulled back a little in the afternoon. That 4-hour chart looks like it might be heading toward a crossing over going down as we really see a sideways slide and effect price movements above both the weekly and the 2-day trend line. So we'll wait, see how the week shapes up, if it continues to bound up or not. But so far, so good, up $4, $4+. So not bad, my friends, not bad at all. Looking at the closing price, up $4, just a little bit under that because we got it at 136.29, so at 140.05. So that's where we are on 20-year bonds. Now again, we are talking and we will be writing more about how you find jumping in points and methods for that. Several of you posted interesting methods that you use successfully to get out when you hit certain points, when you sell 30%, 50%. I have ways that I do it also, and that's what I want you to experiment and experience with your trade worksheets. That's why you fill out your trade worksheets. So you'll see those in your show notes for every single broadcast that we do. We put PDFs to the trade worksheet, weekly market worksheet, daily worksheet. Those, if you want to really learn what you're doing, fill those out every day, every trade. And we also have, and I'll put at the end of today's training, I'll make sure that you have all three methods for how to use the trade worksheet, daily market worksheet, and weekly market worksheet. I'll put those trainings at the end of the video. And again, for those listening on our podcast, just go to chartingwealth.com. You can go to our YouTube channel and you'll see that at the end of today's video. And that again is just some great stuff, more training that we have for you. Lastly, we go to gold. What do we see going on with gold? Now, don't forget, we did another little experiment on gold. We used the 2-day, I'll get to that, the 2-day. I'll show you where that was, but we did a buy-in on Monday of this last week, and gold has done well for us too. Gold was down a little bit for the day on Friday, 0.33%. We see on the weekly chart spiking up on the price percent oscillator, derivative oscillator, losing some momentum. That's still coming from the sideways slide on that oscillation. And we go to the 2-day chart. What do we see there? Well, we see we have 3 2-day candles, so that's 6 days of decent up movement. Price percent oscillator heading up, derivative oscillator gaining upward momentum. The only thing we see a slowdown on is we had a higher high on the candlestick back on the 2-day candle ending Wednesday. So that represented Tuesday and Wednesday, the 6th and the 7th of August. This latest candle representing Thursday the 8th and Friday the 9th of August, not reaching quite the same high. That's probably another reason the derivative oscillator on the weekly chart was losing some momentum. We're not seeing that reflected on the 2-day. And we go to the 4-hour. What do we see there? The 4-hour chart shows us basically a sideways slide for the last, that's 5 candles, so that'd be 2.5 days. Price is well above the 2-day and the weekly trend lines. Derivative oscillator losing momentum. Price percent oscillator is going a little less than flat. So again, keep your eye on gold. Oh, and I was going to show you where our jumping in point was. Jumping in point was Monday at the end of the day when the 2-day candle was crossing. And we called that cross at the same time, and we bought in a practice trade on gold at 355 on the day it crossed over on the 2-day chart in the afternoon, same direction as the weekly at 137.82. 137.82 reached a high over the next 2 days of 142.47. And of course, the high on the last 2 days of the week, 142.37. So was that the same? No, 47 and 37, so close. Anyway, that's where we are, folks, as we end the week. I hope you guys are excited. It's nice as we're coming out of the summertime trading zone, going into the transition zone, going into the fall winter trading zone. And again, markets are roiling. They're interesting. I've got a great training for all of our subscribers, and it is on the coming market crash. Not saying that it's underway, when it's going to happen, just what's going on, but I am encouraging you to study that video. How do you get that video? Well, you have to be a subscriber. We'd like you to be a subscriber at chartingwealth.com. It's absolutely free. Doesn't cost you a penny. Go there, put in your name, email address, and every day, as soon as we record our training, you get, well, as soon as we record our daily market review or our weekly market review as we do on Fridays that we're recording right now, we pop that off in your email to you. It shows up. It's right there with the video, with the show notes, with all the interesting trainings, the links to the charts, to the discounts we have for TC2000, the paid end of freestockcharts.com, all the special trainings that we put out, the PDFs on the weekly market worksheet, daily market worksheet, trade worksheet, links in order to buy our book. Yes, Charting Your Way to Wealth is our first book. We're working on our second book right now, Optionable Wealth. I want you to have the first one first. It's what you need if you want to know what it is we do here, why we do it, how we do it, understand the indicators that we use, all those things, all available for you in that book. You'll see a link to purchase it in the show notes, and you get to sponsor us. Help us Help us pay for the bandwidth, all the costs associated with the channel. When you buy that book, you do that. And don't forget Patreon supporters. I don't forget you. Great training that I did just for you today, coming in your email as soon as I get all this uploaded. We have our special Patreon monthly question and answer live call-in this Wednesday, 12:30 Eastern Daylight Time. That's 12:30 in the afternoon. Of course, it's not in the morning. I don't know how many of you'd be there with me. Maybe you're night owls. You'd all be there. But it's in the afternoon on Wednesday, the 14th of August. We want you to be a Patreon supporter. You get into any of our Patreon levels. You get to participate in that monthly call-in. If you're at that intermediate level, you get a personal call with me every month. You just got to ask, and I am happy to set that up for you. Plus, that intermediate level, you get our book for free. But anyway, check out the link in the show notes. Support us on Patreon if you would. Buy the book at least. And my friends, we love to hear from you. Write us cw@chartingwealth.com. These markets are fascinating. Don't forget, weekly vertical crossovers in effect, going down on the S&P 500 and the NASDAQ 100. QQQ, that's the NASDAQ 100. SPY, that's the S&P 500 ETFs for both of those. The inverse of those, SH, is the single inverse ETF on the S&P 500, means it goes up when the S&P goes down, and PSQ is a single inverse on the NASDAQ 100, or QQQ. It goes up when the NASDAQ goes down. My friends, thank you for all your support, your kind words, your motivation. We do this for you. We do it for free, and we appreciate your support and your participation. Because if you're not participating, you're just wasting your time. And we want you to master these charts and become multi-millionaires. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.